Welcome to Red and the Black. It's been a little while since we've had one of these sessions, and we've got another one planned for before the end of the year. I'm Stephen Michelle, for those that don't know me, and PCI obviously is an insolvency firm, and if we can help you out with any insolvency issues that you might have, please don't hesitate to give us a call. There's a couple of housekeeping things for today. If you want to ask a question, there's a chat function at the bottom of the screen. Just type it in. We'll get to questions at the end of the session. And I'd like to welcome Graham Jorgensen from Wollermann's Corporate Brokers, who's joining us today to talk about sale of businesses. And it's a very interesting area. It's one that we're constantly actually involved in with some of the insolvency matters that we've got. And I'm sure that all the accountants that are joining us today will have clients that are either considering or maybe have gone through the actual process itself. So a little bit about Graham. Graham's actually he's one of the brethren. He's was a former insolvency practitioner, so he knows what side of the fence that we normally sit on, and has been involved in actually having his own business over the years, and has gone into this area with Ian Wollermann in terms of business sales. And so that insolvency knowledge and also running your own business, Graham, would tend to give you a lot of experience in helping potential clients to sell their businesses. So
Thanks,
welcome
Stephen.
today.
Thank you and welcome everyone. It certainly does. It gives you that commercial background in regards to it, which is then allows you to bring that to the front when you're obviously talking to clients, accountants, their clients, and looking at different alternatives that are available for the realisation of their business in one form or another.
So tell me, what is actually what are the trends that you're currently seeing?
Yeah.
You know, like so what businesses are you seeing that are coming onto the market?
Well,
What's sort of happening with the prices
yeah, look,
given the
it, it,
economic climate?
it's quite interesting given the economic climate and other things, and what we're seeing not only over this financial year, but this calendar year, we've seen that business prices per se are pretty static, if not reducing. So that means people are really assessing the multiple and the maintainable earnings of a business, looking at how reflective that is going forward. And the multiples are quite small. But there's no surprise because of the economic, and it's a trend across a lot of industries at the moment. Again, a lot of businesses, we're still coming out of the COVID impact and the funding by the government. So and I know the insolvency numbers are completely up at the moment. So it's the reverse for you guys. However, if a business is making a loss, why would you want to buy it? You're not going to pass someone else's troubles and you're going to buy them. But saying that, what we do find is a sustainable business that's profitable are being snapped up strategically. They're being bought by mid to large enterprises who are buying, rather than looking for organic growth, they're looking for strategic and acquisition growth. They want it fast and they want it sharp. So if you've got a good sustainable business, there is a market for that business being sold. And I guess if we're looking at trends and what's moving and what not, well, the first one I can say is accounting practices. We are selling those, and they're very much in demand for the reasons I just said. Strategically, people want to bolt on another business, and they want to, literally add, another $500 million worth of sales to their existing business, which they then have the economies of scale. So it's worth much more to them. Solicitors, professional firms per se, medical, allied health are still very much in demand. Transport, warehousing, freight forwarding, manufacturing, both in fabrication as well as in particular maintenance work, and then probably coming down to the whole lot, which is that online home services. But anything in the IT with that regular maintenance review, very much looking at that reoccurring revenue side of things, which mitigates a lot of a purchaser's risk. they're in demand. So they're all the things that we've got going on at the moment. So you just got to balance it out and look for those sustainable businesses.
So what, yeah, is there any particular trend in why people are looking to sell their businesses?
That's an interesting one in that a lot of these growth businesses, a lot of their family, they're looking, you can either sell it to your family members, you're looking to pass it on to your senior management, and you work through that. It just seems that the family members have had too much of a good life, and we're seeing that um, elder parent groups in that 50, 60, all the way up to 80 years of age are stuck with their business and they don't have an exit strategy. So they're then looking to their accountants for really financial advice in regards to how can they exit and still create wealth for themselves and potentially their children, whether that's a direct sale or some type of licensing arrangement. So we are stuck that sometimes the children have too good a life and they don't want to do the hard yards anymore. So we're stuck with that position.
Yeah. And do you get many businesses that come to you that they're just distressed, so the owners are, for whatever reason,
Yeah.
whether it's health or financial or whatever, that they come to you and say, okay, look, we need to offload this fairly quickly if we can.
And the trend generally is we hope when we're coming through and again, using the accountants and other things that we get the true story at the beginning because it helps us give salient business advice and how to work it and go through it. Our business sale process per se, it's not a very quick process. It's a 3, 6 month, 8-month process to do a development, develop a business profile or memorandum, run it through the advertising, through our web listings and other things, and then take it to the market, talk to our target audience, and then move through that cycle. So you can hear that it's not quick. If it's in an insolvent situation or is under cash flow pressure, these things come out. Now, sometimes the principals won't tell us that at the beginning, but where we do find out, then it's a matter of looking at the position, whether it is insolvent or not, or alternatively, what the cash flow, trying to have a chat with their accountant to work out what we can and can't do. But yeah, sometimes the pressure just, we got one business and the principal wouldn't really listen to their accountant or otherwise. So, and this is a large enterprise, turnover in excess of 100 million, which should not have gone into insolvency administration, but did because of stubbornness of the principals. So yes, it happens, Stephen.
So with that sort of timeline of a sale, how long generally does it take to do each of the different steps? So if it's a sort of say 8 or 9 month process, you went through 4 or 5 different steps. Generally speaking, how long does it take to develop each step?
When we're going through that process, and let's think about that 3-month, 12-week cycle, from the time of our appointment, we do complete an agency agreement. And most times we would like to be involved, other than a new enterprise that's coming to us to say sell now, we might already be in this process with the accountant 6 months, 12 months before we get there. And we've already advised on a lot of things that we'll talk about a little bit later on in this discussion. But let's say we get there, but it takes a fortnight for us to do a detailed memorandum, assuming the available information is given by the principal. We then list it on its various websites and other things. We also develop a target audience. So we'll not only speak with the vendors and the accountants and their advisors to say who are the likely purchasers or what industry groups could be, but we look both vertical and horizontal at the business to come up with a target audience. We send them what I term our business flyer. That's in the business alert to say, here are the salient business points. Here's why you would look at this memorandum. And then they complete their confidentiality agreement. Up until then, it is completely confidential. Once they've completed the confidentiality agreement, yes, they're getting a copy of the memorandum. The memorandum details the business and all the information, including financial and operational areas. And then we're moving through that cycle. So that's probably all happening in the first month, but then it takes probably the next eight weeks to develop discussions, get evaluations underway, potentially look at some site visits or do things. And then it's just how what the market's telling you and what those particular parties that are interested in, how they wish to progress their evaluation of the business.
Right. And
so that's probably the first 3 months, and thereafter it's just finding the right buyer.
So one of the things that would happen in a sale, so when they've signed the confidentiality agreement, I assume that in some cases, competitors of the business that you're trying to sell, trying to get a bit of a look under the bonnet as to what's going on and get that information. That would be, I suspect that would be a concern of a business owner.
It certainly is a major focus of an owner. So where we're doing a detailed memorandum, for example, I might list, and let's say we list and profile the last 12 months sales cycle by customers to see what the penetration is and who's got what as compared to the total sales for that financial year. Well, again, we might just call it client one. So we won't actually ever tell them the client, and we will try not to give away confidential information or processes. And where we do, we will dumb it down and use the word client one rather than a specific name. And same when we're doing an employee profile and we're doing the org chart, we'll try and go to roles rather than people's names.
Yep.
So we try and do all these things just such that they have valid information to evaluate the business. They just don't have the detailed knowledge or the customer list per se. That would only come through only after we've got a valid offer and we're moving through the due diligence process.
Okay. And so we get approached every now and then from buyers, people that are interested in buying, buy any business that we might have that
Yes.
might be available to sale. Is there any sort of profile of a standard type of a buyer? So, and probably where I'm coming from is, for example, it used to be that, maybe some overseas residents that want to come into the country, might be interested in buying a business. Is that still quite prevalent at this stage, or?
It still is, and we're still seeing it's not so much more the Chinese interested parties anymore. It's more the Indians. We do get a lot of contacts and family members acting on behalf of their family overseas in both the Chinese and Indian, but dominantly these days it's more the Indian areas. We also have, as I said to you, those mid to large size enterprises. They're always registering right now. They're happy to buy a distressed business. They're happy to buy a sustainable business. They're just looking strategically, how does that client base fit within my organisation, and what can I do with it? So they are, as I said to you, that seems to me to be very active, and they are very aggressive. And what's good is they've already got the size to them, so they don't have any trouble raising cash. And they've certainly got the resources via their own staff to do an evaluation, and they act quickly. So the large term enterprises, they're good. And some overseas people are certainly, they still put their hand up to target acquisitions here in Australia. And a lot of them are looking at some of those businesses that I just read off before. That's their background.
Okay. Now, in terms of, are there any sort of businesses that are not selling at the moment? So I know that a lot of the insolvency work that we're getting at the moment, there's lots of in the hospitality industry and cafes and those sorts of things. There's a fair few in the transport industry as well, and then of course you've got the builders and the construction industry that's gone through a major upheaval over the last 12 or so months.
I think you've hit the nail on the head there. And when we talk about the major banks, you're pretty much naming all the industries that they'll stay away from a funding or an alternative relationship point of view. So, hospitality, would they be funding it without a bricks and mortars solution? The answer is no. They won't, certainly in regards to the areas that you mentioned. What we're seeing is, the large retail presence in the large shopping centres. Again, the growth in those have stopped growing. They're actually retracting. So the performance in those particular shopping centres around Australia are deteriorating. So they're getting, a lot of those places now are looking for rent assistance or, alternative funding, commercial arrangements being reduced, together with when we're looking at businesses that are unsustainable, there's nowhere to hide. At the end of the day, this hard data is there for you to see: financial statements, current management accounts on the performance. No one wants to buy another load of issues unless it's strategic and all you want is that customer base. Yeah. So there are alternatives and there's reasons for it, but no one wants to buy. No one's going to pick up a whole organisation that's already losing $1 million a year.
Yeah. So in terms of funding for the purchase of a business, what are the alternatives available? What's the appetite of? I know we've sort of touched on some of those industries that the banks will stay clear of.
Yeah.
But I assume that you get purchasers that come to you and say, "Well, look, I'm really interested in this business, but I need some assistance to help us fund us into that particular purchase."
It's quite an interesting comment, that one, because we will get people that are interested in purchasing a business and they've come with no funding alternative, no funding arrangement. So in the end, they've just asked us to help them. Now, look, we have relationships with the major banks and we use them from time to time. We've got good relationships with second tier, Judo, Macquarie and Bendigo. We can always go back to those and other things. We use finance brokers from time to time as well. But the major one, when we're talking about the majors, the big four plus the second tier, they're just procedurally hard to deal with and time consuming. That they've got, basically a 3-stage process of approval. You got your loan officer who's then got to do a proposal, get it approved by his manager. His manager then takes it onto the credit department with his approval. Credit department then eventually has got to get an independent review from overseas. And everyone's raising questions. That takes anywhere between 6 and 12 weeks itself in that process. And then they ask you to recomplete the application form at the end. So procedurally, they're a nightmare to deal with. What we're finding, essentially, those majors are all going back to bricks and mortars lending. They're going back to traditional methods and they're ticking off their industry groups that they'll lend to. What we're finding, and that's what's been going on, but what we're finding is a lot of people are going to the alternative financial arrangements, whether it's asset financing, debt, and they may be a point or two above, but at least they can get established, get a track record for a year or two, and then go back to one of the majors where they may have a normal transactional banking relationship, and they can then get funding then. But what we're really finding, especially over the last 18 months, and probably more particularly the last 6 months, is just private lending. What we're finding is equity groups, solicitors, general accounting, and most of all the finance brokers themselves have got client funds available to them, and they're lending that out. Now, and they're lending pretty aggressively. So where the bank might be charging 7%, these guys are charging 7.5 to 8.5. They then scale it up based on risk. I understand that, but they are providing better investment alternatives. And why would you do that as a private lender? Well, alternatively, where you're using your money and you're getting a greater return than what you can get at the banking. So all of a sudden, they're doubling their investment, and most of the time, they're getting asset backing for it, direct asset backing off the company. So it's a great solution, and people are using their large client and wealthier clients for money.
What role then do you play in, so presumably, it's a sort of a team effort when you're looking to sell the business between yourselves, the accountant, and the lawyer who's going to document all this up.
Sure.
What role do you play in terms of that funding side of things?
We will, again, our memorandum is pretty detailed. Most times our memorandum will not only introduce the business, the operations, debtors, creditors, cash flow, but it'll also have a summary of the operations, key processes, it will do a financial analysis. We do ratio analysis, and together there's a 5-year, generally a 5-year transaction, a P&L summary within the document. So a lot of the times that is actually what's used to actually make the banking application or the finance application, and we move through that process. At the end of the day, the purchaser's accountant, together with the purchaser, will then fine-tune that application. But originally, with the banks I mentioned and the second-tier groups and generally the finance brokers and the equity groups, they'll just use our memorandum as a starting position.
Yeah, okay. And so, one of the things that you mentioned earlier on was the fact that, partway through this process, you'll go and get a valuation of the business. So I assume is that a valuation that you do, or one that an independent valuer
I use the
does?
valuation to say we will use different methodologies to come up with what we think is our sale and purchase price. We'll generally discuss that privately with the vendor to say where our realistic assessment is for the business, and give them a guide that plus or minus 10%, that's within a fair range. And alternatively, sometimes they'll say your sale price might be a little bit different. And again, you don't want to be too far out of the realms, because you only get a chance to make one first impression, and that's same for your business. So if you stretch yourself too much, you're going to generate no interest, and then later on, when you've got to reduce the price down because of that, it generally doesn't have a great outcome for the vendor. So you want to price it sensibly, let the market determine the actual price, and you're showing him how you've suggested a price, and then he's certainly got the information to do his own P&L, determine his own calculations for how he wishes to value the business. And then hopefully if we're thereabouts in the ballpark with each other, then that's when the discussion takes place.
So how do you, is it generally based on a multiple of EBITDA or something like that? Is that how?
Yeah, I think if we do that, you're looking at, if I'm looking at accounting firms, yes, it's all about recurring fees.
Yeah.
We do look at maintainable earnings across the group. The big one is multiple and how we can affect the multiple. We look at cash flows. I'll look at asset positions, and if need be, involve auctioneer firms to value the assets and move forward. So I do bring my background as an insolvency expert to the table on occasions. And one of the few things, if you've got the right client and he wants a definite outcome, we can turn around, and it's one of the only few times you can say, well, I can definitely give you that outcome, because I can go through a sale process. We can go through advertising the business for sale. We can negotiate with the parties. If there's no agreed outcome within an agreed time frame, I can then involve the auctioneer, and with an auctioneer, we can then say, here's a 2-3 week crossover period with the ultimate. They then take full control of it at the end of that period, and the assets going for auction. All of a sudden, there is a guaranteed sale process. And we can do that. And we've done that for both transport companies and engineering companies that are high in assets, where you just can't get the return from a going concern basis, because the assets just far outweigh the potential revenue that you'd get from a going concern business.
So when should a business actually first contact a broker? Should they and what I'm getting at here is, it should have been nice and early so that a lot of planning can go into it, or what generally happens in
it's interesting, because if you look at and you think about who are the types of buyers for a business, and understand who you're trying to sell your business to. You've got your financial buyer who's just looking for a commercial advantage. You've got a competitor who may be looking for that strategic alignment. And then ultimately you got this strategic person who won't really care what the P&L performance is. He just wants the acquisition. When you understand that, and you combine that with your value proposition and how you want to align your business to that particular group of buyers, that's where you're getting to the position of what effect can the broker have, and how can you present that business, and in what time frame. Because what you're trying to do is mitigate as many of the risks in the sale process, more on behalf of the buyer, so that he's been convinced to buy the business at the agreed price. So again, if you've got a target on who you're appealing to, you know what your value proposition is, that's much easier to say, here are the key answers to this value proposition, which means I'm hitting his strategic buttons on the sale process.
Are there any tips that you could give the
Yeah,
audience here today about how they should prepare a client for sale?
yeah. When I'm looking at the valuing of the business, and there's traditional methods that we just went through, I seem to come back to 5 key questions that I ask myself, which I'm then asking my clients, whether it's the accountants, clients' advisors, the vendor themselves, is what is your value proposition? And I'm very clear in that. What makes you different? Is it your staff? Is it your technology? Is it your process? Um, whom is your likely buyer going to be? So who is it? Who is your target? Because you want to be answering what you believe their key questions would be. So how can I appeal to them? The vendor, he's got to look at the sale price. What's influencing the sale price for him? That's the hard data. That's his trading performance. All these things that someone for the accountants, we're going to use that data to value the business. I know that. So you've got to go through all of that position and understand quite clearly and talk to him about pricing. The other part is from the buyer, and I mentioned risk and assessing that. A lot of the time I call those the soft factors. So you're looking at the growth, the vision for the business plans, cash flows, management, and variance reporting on a monthly, quarterly basis, what the systems and processes are for the business. And those soft assets, and I'm coming back to the culture of the organization, whether it's supported or not, whether anything's there, if they're the reasons why people will buy your business. So if we can understand those, then we can actually clean up the hygiene of your business before you get to a sale process. Some of those things can take 6 to 12 months to clean up. Now, the difference in those is when we start to talk about that risk and mitigation, then your multiple's increasing. And I get to the part where one of the key things in this process is planning and actions to take part. You look at your key customers, what's your relationship to them? How can I increase the sales to them? Management of the cash flow. What's the effect on debtors and creditors? Operational efficiencies. And the big one for me is the value enhancers. How can I affect those? Start with, quite clearly start with the end in mind. Who am I appealing to? Emphasize growth over just sales growth. Look to increase your gross margin business. What products and services you got? Focus, don't diversify. Own your products and services. So build equity within your own business. Protect that equity, take security, patent the process, etc. And finally, and one of the big things is don't build the business around you and the dependency on you as a principal. Diversify and have faith in your staff members to run the business so it thrives without you. Go on holidays. Test the business to make sure that it runs by itself. All of those things means that when you come to selling your business, the business can thrive without you. That gives a purchaser enormous confidence. And all of a sudden, they're willing to pay more because the business is not built around you. So be self-sufficient.
Well, that's good advice, I think, just generally.
Yeah.
Even if you're not selling your business. What, just as a final question,
Sure.
I'm sure that people would like to know what does all this sort of cost? What's the cost parameters involved in engaging a broker?
I think for the accountants and generally being aware that a broker will, and look, we're certainly not the cheapest in the market, and we're certainly not the most expensive. I think we're probably in that middle to higher range in our fees, but we will charge an establishment fee depending on what scale it is. It could be anything from $2,500, $5,000, all the way up to around $10,000, and that's based on what business we're reviewing and how we're going about it. And then after that, that's the only fee that's incurred. The next part of it is our commission only on the successful sale of a business, and that's roughly 8%. Now, that's the recommended scale. It might be a little bit higher for different businesses, where the risks, and depending on what we're doing and how we're structuring it, and sometimes it might be 6 to 8%. But generally, the fees are negotiable, but they're reflective of the assignment on hand that we're completing. And look, that's a guide for the team to look for.
Yeah, thanks, Graham. Okay, well, I think we've any questions that people have, now's a good time to actually put them up. And we've got a couple of questions here, and I'll read them out to you. How is intellectual property valued, and where does it fit in to an asking price? Example, formulas for products manufactured to the customer.
Again, we may look at what patents and other formulas have been developed by a manufacturing process, how it's been secured. And then what you're looking is what sales are attached to that IP intellect. And then ultimately, if it's secured and repetitive, then that's going to be reflective in the multiple, which means that you're going to get a higher price for your business overall. You're not valuing the intellectual property per se by itself. You're actually bundling it in with the business sale. And if it helps, then it certainly will increase the price.
Okay. And the second question is, how would the reduction of stock holding within a 12-month period affect the multiple side of the value?
I hear the question, but not really, Vincent. I think what you're looking at there is that if you're bringing your stock down to a manageable level and it's only currency, then that's actually a great thing for the business, because it actually is reducing the requirement on the cash flow for the business and the funding of same. Whereas if it's as a result of other effects within the business, then people may start to ask the questions. And if that pops up in ratio analysis, then there may be some reasons for it, and you're going to ask those questions and have an answer for it, is my suggestion. Sometimes there are both positive answers and negative answers. We would like to be aware of them up front so that you can manage the solution.
Yep. Any other questions from anyone? I don't see any. So, and we're just over half an hour, and we said that it would be a session that would be selling your business in 30 minutes, and I think we've just about achieved that. Graham, look, thank you very much for attending today and sharing your knowledge with us in relation to business sales. I encourage anybody that wants to has clients that are interested in selling their business to have a chat to Graham and Wollermann's in relation to it. I thank you all for attending today and taking the time out to attend this session at Red and the Black. Our next session is going to be in about a month's time, and it's likely to be on director penalty notices. So we'd love you to attend that, and we'll send out an invitation in relation to it. Everyone have a really good day. And once again, Graham, thanks for attending.
Thank you, Stephen. Thank you, everyone.
Thank you.
Cheers.
Thank you.
Bye-bye.